All right, everybody, it's Wednesday, January 11th. I'm sitting back in my chair. Yesterday, somebody said I started out sitting back and then I ended up in the front. Got too excited. What can I tell you? All right, we had a good day today. Market was up. Yesterday was a 9 billion net positive flow. So we're back in positive territory by about 3 billion. In other words, we're 3 billion above the level we were on December 14th, just before that big tax drain. So we're back in the positive. Tomorrow is the 12th. We're going to get a Social Security payment. So that'll probably be like a net positive flow of something around 34, 39 billion. So, we're seeing some good numbers now. And I mean, everything's on track. Now, tomorrow we get a CPI number. I hope that the CPI number scares the monetarist zombies, and I hope they sell. Because we really have a window here where we could add on to our long stock market positions for a rally that should it should last most of the year, at least until the end of September, when we know what's going to happen. I talked about that yesterday and the prior day about the new Congress. I'm going to get into that in a second, but it's just kind of repeating what I've been saying about, there's a lot of rhetoric right now that I'm seeing. As a matter of fact, I think it's more than I've seen in a long time about the debt and, too much spending and and, it's a little bit worrisome. It's coming from everybody now. It's coming from McCarthy. McCarthy said that he thinks that the debt is one of the most dangerous things for the nation. Actually, I think the way he thinks about it and what he believes about the so-called debt in reality is probably the most dangerous thing for the nation, because this mentality is completely wrong. It's completely ignorant. And if it leads to massive cuts in spending or the belief that we have to balance the budget, then I'm telling you right now, the economy is finished. Finished. Then you have that recession that everybody is saying is 100% guaranteed this year. I mean, I've been saying there will be no recession, but now I'm tempering my view. At least I think we're going to be okay through the end of September, which is the end of the fiscal year. And then we got to see what Congress is going to do. I don't think they can make changes right now in the current level of appropriations, and that's okay. It's fine. And I think that Treasury is going to be able to kind of skate by without the debt ceiling being increased, up until maybe September 30th. It might get a little bit dicey, as we approach that date. But I think Yellen will be able to navigate through that without any kind of a slowdown in payments or anything like that. But after that, and we got plenty of time to talk about this, after that is when the potential for real trouble creeps into the picture. All right, because everybody's saying this now. We got to do something about the debt. And even Jamie Dimon, CEO of JP Morgan Chase. By the way, Chase is JP Morgan. I've been telling you guys to buy banks for like months, all right? Jamie Dimon said he's really worried about the debt. So he's another one who really doesn't understand it. That's number one. So anyway, right now, I was going to say, I think we got a very positive tone for the market going into mid-February. Why mid-February? Because that's when fiscal flows will peak, at least temporarily. And then we got March tax drain, we got April tax drain, and that'll probably create some volatility or some problems into May, and then we start bouncing back again. I've also noticed that the average daily leading spending flows have been above 30 billion average daily leading flows, okay, have been above. That's literally let's go back to the swimming pool analogy. That would be like the flow rate of the water coming out of the pipe, not the swimming pool level. The swimming pool level is also determined by drainage, okay? You got think of the swimming pool. There's an inflow and an outflow. The inflow is that pipe. Government pumps it in. The outflow is the drain at the bottom. That's taxation, and government sucks it out. The pipe, the inflow, now is running at a very high rate. 6 days now this month, over 30 billion. Just to give you some perspective on that, last month in December, we only had 5 days over 30 billion, okay, for the whole month. Now, we're not even done with this month. We're only, we're only on the, we're like 6 business days into the month, okay, 6 statement days. And in in November, we only had 2 days of 30 billion. So 2 in November, 5 in December, and we already have 6 days, consecutive days above 30 billion. Consecutive days above 30 billion. So that's a pretty good indication that flow rate out of the pipe is picking up. And I like that. That is a good sign. I like that a lot. So when I see something like that, I mean, it just boosts my confidence. Just boosts my confidence. What do we got over here? Oh, yeah. Hey, check it out. Little baseball action. Anyway, baseball's over. What else is going on? Today's EIA, the Energy Information Administration report, we had some big crazy numbers in there. We had a 19 million barrel build in crude inventories. Okay, so that was huge. We had a 4.1 million barrel build in gasoline inventories. Distillate drew down. Crude inventories are now up 6.4% year over year. That is the biggest year over year positive differential, I think, in like 13 months. However, gasoline and distillate inventories are down year over year, so those refined products still remain pretty tight. The other thing was that exports, crude exports, fell by over 2 million barrels a day. I think a lot of these numbers that we're seeing, especially in the last 2 weeks of the EIA reports, I'm guessing that they've been highly influenced by weather, because the last report, before today, last Wednesday, that covered the week that ended December 28th. And that week we had the bomb cyclone, massive freezing cold temperatures here in the Northeast and throughout a lot of the country. We had massive historic snowfall in western New York and up around the Great Lakes. So that might have shut things down. It might have had an influence. And then in this report, which covered the week through January 6th, okay, that was last Friday, all the flooding in California, which is still going on. California, major energy consumers. So I mean, I think weather may be playing a factor in these numbers, because we're seeing some wild, the volatility on these numbers just has been enormous. By the way, crude was up today in spite of these numbers. All right. So something to keep an eye on. I think that with the economy bouncing back this year, that's another thing. Let me just mention that the Atlanta Fed, in their GDP Now forecast, once again revised up the fourth quarter GDP to 4.1%. I think that's like the 4th positive revision. So we're being told not just that there might be a recession in 2023. I've actually seen headlines and people saying it's 100% probability. In other words, a certainty that we're going to see a recession in 2023. And if it was, by the way, if it wasn't for the rhetoric I'm hearing out of Congress right now, which again, I'm saying that only applies after September 30th. And it really only applies, I would say, into the beginning of 2024. I think we're going to be okay this year. But the certainty of recession that's being kind of communicated out there, put out there, I mean, it's just like, to me, we've had 4 upward revisions in fourth quarter GDP, and they're trying to make us believe that just out of nowhere, there's going to be a sudden crash. And, I went through the factors that are kind of improving. I mean, we're seeing improvement in the supply chain. We're seeing inflation come down. I mean, used car prices dropped the most on record recently. It was in December. The Fed is slowing its pace of rate increases. Like, if you consider that to be a negative, I frankly don't. I mean, I've been talking about rate hikes and how they are acting as a fiscal stimulus, how they're flowing into the economy. And again, we could have the discussion that, well, yeah, Mike, they're flowing to the wrong people. They're flowing to people that have money. And I agree with that. Yeah, I'm not going to argue with that. As a matter of fact, they just said that Rolls-Royce sales are at an all-time record high. It's like the hottest thing going. I mean, it's really a terrible inequity that, basically the government's sending out checks, massive checks now, to financial institutions that don't even need it. Let's understand, too, that the banks, for the last basically 2 years, they've been moving deposits and reserves into the reverse repo facility because they don't even want the reserves, okay? But we're paying, the Fed is paying them. The government's sending out checks to rich people to the extent that Rolls-Royce sales are the hottest they've ever been. I mean, think about this. But again, for me personally, 2 things. Number 1, that wouldn't be my policy if I was in charge. And number 2, I try to focus on the swimming pool. Is the water going up? If the water is going up, the economy is going to expand. Now, it may expand in an uneven fashion, but let's face it, that's been the case for like 40 years. I mean, labor, workers, they're getting screwed, we know that. But at least if the economy is expanding, there's a better chance that, people are going to be okay. They may not going to be living their best lives, and the inequity, the inequality is going to stay there. But it's better than if everything's going down. If everything's going down, that's a bad scenario. And again, the only way that everything could go down is if the government takes back its money on this false belief that it needs to, it needs to balance its books. I mean, this conversation and the way it's constantly framed, like, hey, you got to do it in your household and I got to do it in my household. The government, no, it's not the same thing. It's apples and oranges. It sounds correct to most people. And I get it. I mean, a lot of you, maybe when you came to this channel, you were skeptical about things I said, but then you learned and then you got on board and then a light bulb went off in your head and you say, yeah, that's right, I see it now. But most people obviously are not on this channel. Very few are, actually. And that sucks, but what are you going to do, right? So yeah, that's the update. I know what I was going to say. Tomorrow, and I'm hoping for this, I'm hoping we get something that triggers the monetarist zombies and they sell, like maybe a little bit hotter CPI. And they sell because, I'm going to use that as another buying opportunity. I'm going to add to my position. And finally, let me just leave off with something that, I've said many, many times. And to me, it's kind of like, it's both maddening and comical. Okay? And that's the Fed. The Fed, they're seeing the stock market go up. They're seeing upward revisions in GDP. And they're like, beside themselves. They're like, this should not be happening. We want to push everything down. And they don't understand that literally it's their own rate increase policies that are causing the expansion. Again, it's sending out checks. People buying Rolls Royces. Not, unfortunately, again, it's not equally distributed, but folks, just focus on the swimming pool, the level of the swimming pool. But the Fed is like, we don't understand it. We're not going to give up. We're going to go harder. And it's like every time they go harder, two things. Number one, the checks just keep getting bigger. And they don't really allow inflation to go down as much as it should. Because every time they raise the interest rate, what's happening? They're raising the general price level. So you could see now, like, inherently in the economy, like organically, prices want to come down. The supply chain issues, all these other things are starting to, loosen up. And we see supplies normalizing. Look at crude up 19 million barrels. Like, supplies are normalizing. But the Fed, through its own policy, which it believes that is working against inflation, is literally keeping the price level up. And they don't get it. They just don't, and they never will get it, because like I've said so many times, that is the orthodoxy. That is the way they think. Sad but true. Anyway, like I said, it's both, for me, it's both maddening. Like, I hate them. I hate them. Because they just won't re-examine their theories. They just keep doubling down on them. But it's also kind of funny to see them, like, scratching their heads and just like, we don't, what's going on. It's pretty easy to understand. Anyway, that's it. Go to my website, pitbulleconomics.com or mmteconomics.com, and sign up for a 30-day free trial of MMT Trader. It's going to be the best thing you did in 2023. Believe me. Bye.